Hello, crypto world. Welcome to the Chart Historian. My name is Justin, and on this channel, I delve deep into crypto charts, exploring chart structures, fractals, and patterns. In this video, I'm going to show you 6 different charts that will paint a picture, an economic picture of what I believe the future holds, and more importantly, what I believe whoever wins this U.S. election, which is happening today, this is election day, whoever becomes the next president of America is most likely going to have to face some version of what I am going to show you. This is an important video, so please stick around. Let's bring this chart to life. So this is the civilian unemployment rate, and it is a very zoomed out picture. So this chart starts in 1948, and it is my belief that this overall structure is repeating. So we have the first box here and the second box. It's my belief that we are once again working through this first box. This yellow part is what we have already accomplished. So when a fractal repeats, the timing, the height, and the depth, all that is going to be original to the new iteration. So as we can see over here, we see it following the basic idea, but there is some differences, and that is to be expected. Now, what we can expect over here is a basic idea of what the yellow fractal tells us, or pattern. However, how high it goes, how long it takes to play out, all that is unknown. This over here was during C19 when the economies of the world shut down, unemployment naturally spiked. This original spike or wave, if you look over here, wasn't nearly as high as it turned out this time around. This is a good example of the timing, height, and depth being unique. However, the basic idea, the move up and the move down, repeating. So each new update is a month. So this is a very zoomed out picture. It's the big picture of unemployment in America. So let's zoom in. So as you can see, the basic decline is a pretty close match to what originally happened once adjusted for today's timing, height, and depth. And what I find interesting is this bottoming out portion of this chart. It's so far been following it pretty closely, like even this recent pullback in unemployment. Well, that's what this chart tells us should happen. Now, the bigger picture is really this is just a pullback before a much larger move up. So something is going to take place, most likely in the near future, if it continues to follow this, and we have so far no indication saying that it won't. Now, it may not play out exactly like this. The timing of it could be different, but at some point in the future, there is going to be an acceleration, likely, of the unemployment rate in America, which is not going to be easy to navigate for whoever becomes the next U.S. president. So despite all the wonderful talk that we hear, put it in the perspective of facing something like this in the coming days, because this, as of now, shows no sign of deviation, no sign of doing something different. It's following, doing what it should do according to this chart. So if it continues, we should expect something similar as time goes on. The next chart I'd like to show you is the year-over-year inflation rate for the United States of America. Now, it's my belief that this chart is also repeating. Let me show you what I'm talking about. So as you can see, once again, there are 2 parts to this overall structure. There's the first part and the second part. Also, once again, this is on a very large zoomed out picture. This is on a month time frame, so every new update on this chart represents a month. So it is my belief that we have completed the part in this yellow box. Now, once again, the timing, height, and depth, all that is unknown, but we do have a basic roadmap of what, if we continue following this, which, again, there's no indication that it's doing something different, that something similar to this will begin to materialize, that is, over here. Let's zoom into this structure and take a closer look. This is another good example of it being different yet the same. So the timing, height, and depth is clearly different from when it was first printed versus what's happening on today's chart. However, the basic idea is being repeated. Now, I've adjusted this as close as I could to match what is currently taking place on today's chart. In other words, I've adjusted the height and depth and all that as much as I could. I'm not going to go too far into the weeds, but for instance, this move up and this is in relation or the same ratio as it was to this peak over here. Now, it may not play out like that, but what is likely to play out is a move up. If we examine this little part right here where it bottoms out, I find this a little interesting. So here we are zoomed in even closer. Notice how when it bottoms out right here, according to the fractal, this was the low. It's not like that on today's chart. This time, it's over here. Now, that is perfectly normal, the way the timing, height, and depth all play out. It's going to be unique and different from what it was originally, but I kind of also wonder if we have some maybe manipulation going on here as far as the inflation rate goes. This is where it should have happened at least, but the powers that be, or whatever the forces are behind this, have made this the low conveniently right during an election. So I don't know. I'd like to know what you guys think in the comments. So whether or not this is a manipulated low, historically the low was over here after the decline. Today it's here. Regardless, this is the rubber band being pulled back, and at some point we're going to start seeing an accelerated move up in the year-over-year inflation rate. Now, I don't know how high this will go. This is just for your eyes to understand what the rough idea is of the future of this chart. Now, again, the timing, height, and depth, it's all going to be original, so be prepared for some originality, but also be ready for some sort of move up, however high that may end up going. So let's step back and think about these two charts that we just saw. So the first one, which was unemployment, so in the future, we may have something that causes a drastic rise in unemployment coupled with high inflation. That is like a double whammy. If any of you guys have any insights on how this could work, I'd be very interested to hear your comments in the comment section. Let's move on to the next chart. Okay, so this one is very difficult to read. I'll make it a little clearer. So this is the 10-year yield, and I'm starting at the very beginning. So this starts back in 1913. Let's bring this chart to life. So it's my belief that this chart is a repetitive structure. However, it's broken down into smaller segments than the last two charts we looked at. It's hard to see like this. Let me make it a little easier to see. So I am going to make this as if it was a fractal, so it's easy to see. So as you can see in these boxes, it does different things. So in the first part, it kind of goes flat and then it moves up to a peak. The second box, it is a decline to a low. The third box, it moves up again and it comes to a peak. It's kind of a wave and then it declines. The fourth box is it moves up sharply and then it does this long protracted decline. Here we are zoomed out more, and this is where it is my belief that the structure begins to repeat. So this structure that took place from 1912 to 1920, it is my belief that this structure has played out once again on a much larger time frame. Let me make this part of the chart easier to read. So there you have it. And it does the same basic function. It starts off kind of flat or low, and then it moves up. Originally, it moved up steeply. This one was just a gradual rise up from a flat part over here. After that, what does it do? So in the original structure, it declined. So from 1920 to 1928, it declined. Well, from 1981 to 2020, it declined. And by the way, this structure took place from 1941 to 1981. So these structures are repeating, however, on a very, very large scale. So this decline comes to an end in 2020, and it is my belief that we are currently working on this part of the structure, this little tiny box that we see over here from 1928 to 1931. This, by the way, was also the lead up and part of the 1929 peak in the stock market, and I have done a video linking or showing the similarities between what this chart is doing and the Dow Jones over here. I recommend watching that. Now, I thought that this could play out in 2024. It has been playing out in 2024. It's just been going slower than I thought. However, it is continuing to follow what I believe I laid out in that first video. Again, I recommend watching it for a deeper dive into that correlation between the 10-year yield and the Dow Jones. So as you can see, eventually this will decline and it will come to a low again. It has been following this structure, I'd say, pretty well. It's been following it for a very, very long time. This is an extremely large and powerful structure. Once this reaches a low, I don't know how long this will take to play out. Again, the timing, height, and depth is a mystery. That part doesn't repeat. Eventually, it will move up. Okay, so here we are zoomed in a little closer. So this move up, it's an aggressive move up, and it's higher than this. I don't know exactly when this will happen, but I do think that there is a good possibility, or at least a possibility, that it takes place within the next 4 years. Of course, it could take place after those 4 years. This move down as well. So this takes place originally in 1929, this peak. It then declines during the chaos of the crash. So we likely have a similar situation playing out once again. I'll touch on the stock market in a minute. Now, the 1929 crash, if I'm not mistaken, this starts pulling up before the stock market bottoms out. So this could be something that also plays out. And if that's the case, this would likely take place within the next 4 years. Let's move on to the next chart. So this is the 30-year fixed rate mortgage. Now, the reason why I'm showing you this, and I haven't covered this chart in the past, is I believe it ties back to what the 10-year yield is telling us. So there are several different possibilities. I'll show them all to you. So the first possibility is it is repeating what it printed from 1971 to 1981. Now, I don't know if it's going to go this high. This is just a representation for your eyeballs to understand the structure. Don't expect this to be an accurate prediction of how high this will rise. This is just me matching it to this part. Now, let's zoom in. As you can see, it's followed the basic idea with this bounce here. It moves up to this peak. It then moves up again to this peak. And now it's declining. In a similar way, this will start declining. So if this structure is in play, it should continue to wind down in concert with this. At a certain point, if this fractal is at play, we should expect an aggressive move up, which would correlate with something like this. Now let me show you the different options. So there is another possibility that it goes flat, sort of. So if we take this structure and apply it, let me remove the first one. We can see that it is following. So this bounce would be down here. It moves up to this peak right here, and then this. So this could also correlate, again, with this move down. It's just not showing the next part. So that is a possibility. Now, this took place from 1993 to 1999. And the final one is where it goes down. So that would be 1998 to 2003. And this one, to me, it matches the least. So you have this lower part right here. It moves up into this peak, then into this peak, then here. But now it's moving up. So maybe it's something like this, and then it will drop. I don't know. We'll have to see. It's a possibility. So just something to be aware of. It's my belief that it's this one or let me remove that one, or this one that are the most likely at play. But I don't know the future, so I'm just throwing those three out. They're all three possible. I would say the first one where it moves up, so far it matches the best. So that is something else to be aware of. We could see interest rates rise at some point drastically, which would be in line with what the 10-year yield suggests. Let's move on to the next chart. Okay, so this next chart is the Dow Jones, and I've done a lot of videos on this chart. You can watch my most recent video right here. Now, this fractal or structure is from right here. So this is the run-up to C19 and the C19 crash. It is my belief that this chart has been repeating the basic idea that it printed back over here. I don't know if we are exactly at this peak. It could be playing out on a larger time frame where it still needs to move up a little more. However, I think there's an argument that we could be here, and if so, we might pull back a bit more. We'll have to see. This is really speculation exactly where we are, but it is my belief we're probably close to this, maybe almost there, or possibly we are here. This is a peak, people, and what we have coming is a substantial decline. Now, there is a much larger fractal that has been playing out for over 90 years, and that is the run-up to the 1929 peak, and then likely the crash as well that comes with it. I'm not going to go into that structure in this video, but it is in that other video that I showed you. This structure produces this type of crash. And again, this is also following that 1929 structure as well, which has an almost identical crash. Now, I don't know when this will play out, but it most likely will be sooner rather than later. This could be in 2025. We'll have to see how it plays out. This is also painting the picture that whoever wins the U.S. election, it is something that they're going to have to face, and there is no indication that it's doing anything different. Let's jump to the last and final chart. So this final chart is the Russell 2000. Now, the Dow Jones is a small little snippet of the U.S. stock market. This is a much bigger picture of the U.S. stock market. So let's bring this chart to life. Bam. So once again, if we take that same run up to the C19 crash, this structure, is my belief, is once again playing out on a larger time frame over here. And as you can see, it's following the basic idea pretty well. So it is my belief we are at or near this peak structure. Now, you need to understand something about peaks. Peaks are wild places. They're hard to predict. Sometimes they will follow your fractal nice and neatly, but usually they don't. There is some deviation. Look at this one. This one was, for the most part, flat or had the bounces like this shows over here, and then it did move up. But look how high this peak went. That is typical, actually, in a peak. The last one will be higher than the other ones. It's not always like that, but it is a possibility. It could play out with three basic peaks. I don't know. Time will tell. But be prepared also for any one of these to shoot up similar to this and then decline. It could happen here, it could happen here, or it could happen here. Time will tell. But the basic idea, as you can see, is being followed. And once again, this structure produces this type of decline. I don't know how low this will go. I don't know exactly when this will play out. It's likely going to play out sooner rather than later. I'm on a 3-day candle, so every candle is 3 days versus a month. And the same was true with the Dow Jones. It was a 3-day candle. So this is likely to play out sooner rather than later, maybe in 2025. Time will tell. So there you have it, folks. Those are the 6 charts. They relate to each other. 2 of them are the stock market. 2 of them are related to each other in the sense that the 30-year fixed-rate mortgage tends to follow the 10-year yield. As we can see, this decline that starts in 1981 and goes to 2020, have the same decline starting in 1981 going to 2020. And before that was a move up, which we saw over here. We also have the year-over-year inflation rate chart and the U.S. unemployment rate. So, folks, whoever wins this coming election is going to be hit with something that we have never really experienced in our lifetimes. So, whoever you vote for, just keep this in mind and understand that despite all the promises that they may be saying, this is what they're going to have to face at some point, most likely in the coming days. If you're an American, whether you recently immigrated or your family has been here for many generations, this nation has a rich history of overcoming challenges and coming out stronger and better and trusting God through those challenges. So I believe, despite the challenges, there's still good days ahead. This is not financial advice. I'm not a financial advisor, but if you did enjoy this video and you'd like to see more of this type of analysis, I recommend hitting that subscribe button. If you found value in this video, it would be much appreciated if you hit that thumbs up button. I typically cover crypto charts, but I also like to cover macroeconomic charts like this as well. I'm so glad you caught this video. I hope you catch my next one. Have a great day, and bye for now.